Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. I'm always telling you I love when I get questions and comments and ideas for videos. So today's video is brought to you by Mei Ling Feng, who asked me to do a comparison video on DGRO, VIG, and VYM. So that's what we're going to do. First, we're going to talk about each one really quickly, you guys. And if you haven't seen them, I'm going to put a link up here and down below in the description for a link to my dividend ETF playlist. And I have videos on all three of these separately, but I've never done one together. So let's jump right in. First of all, let's start with DGRO. So DGRO, and you guys, we're using ETF.com because it's a great free resource that you can investigate pretty much any ETF. So first thing we want to talk about is the differences. So DGRO is the iShares Core Dividend Growth ETF. Dividend Growth ETF. DGRO tracks an index of U.S. stocks that are selected by dividends, dividend growth, and payout rate, and then weighted by dividend dollars. Now, this is an iShares fund, and it is comparable to, notice none of the ones that we're comparing is in the sort of the same thing. So let's talk really quickly. It's got a super low expense ratio, 0.08%, you guys. It's been around since June of 2014. It's been around for a little while. Has a distribution of 2.07%. Now, you guys, all three of these ETFs pay a quarterly dividend. This one has about 388 holdings. And really quickly, we see that it tracks the Morningstar U.S. Dividend Growth Index. Okay, as I said, we're not going to go deep into these, but we're going to just talk about the difference really fast. If we look at VIG, VIG is the Vanguard Dividend Appreciation ETF. And VIG tracks a market cap weighted index of U.S. companies that have increased their annual dividends for 10 or more consecutive years. So again, this is a little different in that it's looking at more of the appreciation of the stock price than just the dividend price, all right? This fund's been around since 2006, has, again, a low expense ratio. You know, I like low expense ratios, 0.06%. When we look at the competing ETFs, again, DGRO and VYM aren't on there. This currently has a distribution yield of just 1.55%, which if you're a dividend investor seems really low, right? But remember, this concentrates on companies that have been increasing their dividend over time, and that's how it does it. It caps it that way. This has about 247 holdings. And again, this tracks the NASDAQ U.S. Dividend Achievers Select Index. So another different index, you guys. So a little bit different rules in how it plans the money that it uses. Okay, the last one we're going to talk about is VYM. And VYM is the Vanguard High Dividend Yield ETF. Okay, so that pretty much tells you it's a different idea. VYM tracks the FTSE High Dividend Yield Index. The index selects high dividend paying U.S. companies, excluding REITs, okay, and then weights them by market cap. So this is looking at companies that are established. These are companies with a higher dividend payout that maybe don't grow as fast. So you're not going to get quite as much appreciation in the stock price. This one too has been around since 2006. Same expense ratio of 0.06%, so just 6 basis points. And if we look at the ones this competes with, SCHD, HDV, SDY, again, we don't see VIG or DGRO because those have a different mindset in how they're investing, right? The distribution yield currently on this is down to 2.82%. Now, you guys, with what's been going on with the pandemic, all yields are down a little bit. But it's still closer to what a dividend investor would look like, right? Someone in the 3 to 3.5% range. This holds 412 companies, okay? So all three of these are good in that they have several hundred companies in their arsenal. But let's take a look what would have happened if we held all three of these. So now we're going to go to portfoliovisualizer.com. And you guys, I'll put a link in the description for this too. This is a great way to take the funds that you have and compare them to one that you're thinking about buying. All right, so we're going to start with 2014 because remember the DGRO has only been around for that long. So we're going to put in DGRO, 100% of portfolio 1, VIG, 100% of portfolio 2, and VYM, 100% of portfolio 3. And let's analyze the portfolio. All right, so remember number 1, which is our blue line, is DGRO. Number 2, which is the red line, is VIG. And number 3, which is the orange line, is VYM. So first off, we see that DGRO has appreciated the most. Now, what we started in the end of 2014, right, with $10,000. We didn't add any money to that. We just reinvested the dividends and let it grow. So what we would expect to see is the companies that are looking at more share price growth are going to appreciate more than the ETF that's concentrating on higher dividends. And that's what we see, you guys. So DGRO, as of today, would be sitting at about $22,199. So we doubled and then some, right? Portfolio 2, which is VYM, would be up to $21,723. So again, doubled it, but maybe about $500 behind DGRO. So those are pretty similar. But portfolio 3 did not get as much appreciation. VYM sitting at about $18,727. Now, you say, well, that's not as big a jump. Yes, but remember, you're getting a bigger dividend. And if you're looking at that portfolio for dividend income, then you're getting a higher dividend. If we take a look at the year breakdown, we can see that in 2015, they lost a little. All of them did, right? And VIG actually lost the biggest with about 2%. 16, we came back, and VYM was the big winner, right? 17%. 2017, DGRO and VIG both were 22 and 23 respectively. 2018, everything lost. But look at this. VYM actually lost almost 6% in 2018. Remember, that year ended way down. We had a big dip the very last quarter there. If we look at 2019, pretty good year around. 29.8, 29.6, 24.07. All really good years in 2019, right? Now we go over to 2020, and you see VIG was the big winner at about 15.4. VYM didn't do much of anything. It got 1.14. Now, looking so far into 2021, we see that VYM is taking the lead again by 16.08. But remember, if you're a long-term investor, and I encourage everyone to be long-term investors. If you're a long-term investor, depending on what your strategy is, it's going to dictate what you want for these funds, right? So if we look at, again, portfolio 1 being DGRO, the CAGR, the compounded annual growth rate, was 13.05%. For VIG, it was about 12.7%. And for VYM, it was 10.13. The best year for the first two were both over 29%, almost 30%, you guys. VYM's best year was about 24%. VYM also had the worst year at negative 5.91, where the other two lost a little over 2% each in their worst year. So maybe less downside risk to think about. You guys, when you pick these funds, make sure you understand why you're investing in them. All these different funds and ETFs have different ideologies in how they invest, and they all can serve a purpose in your portfolio, or they may not, depending on what your particular needs are. As we said, take a look in the description down there, and take a look through my dividend ETF playlist. You can look into, I think there's about 17 or 18 different videos in there. Lots of different videos, all on different dividend-paying ETFs that can help you out. Anyway, I hope you guys got something out of this. If you did, do me a favor. Drop me that like. It really helps the algorithm. Get some video out to more people. Hit the red button, ring the bell. You get notified every time I make a video. All right, thank you. We'll see you.